Traders, welcome to the expansion phase. Now, this is the second phase in the market map before we complete the full market cycle. Now, in this video, we're going to tie in the expansion phase with supply and demand zones. However, there are a few nuances that you'll need to be aware of, and I'll go deeper into them later on in the video. Now, if you remember from the last video, we went through the contraction phases on the daily and the contraction phases on the H2 chart. Now we're going to continue from the contraction phases on both the daily and H2. However, before we begin, it's important to understand the dilemma I had with the expansion phase before I made this discovery that I believe will allow you to take your winning percentage above 80%. What's this short clip from ATS?
To form our directional bias, which means that this chart's going to define whether we are either looking for buying opportunities or looking for sell opportunities. We're going to pair that to in this illustration, a 15-minute chart, and that's going to be our entry chart. And I want to tell you real quick, just want to make a point. I'm using a 4-hour and a 15 because I know a lot of our guys that are on with us, and a lot of people, they like to trade the swings intraday. But this can also be a daily into a monthly. If you're a longer term trader, it doesn't matter. It's all the same exact thing. You just need a 2 time frame setup that are far enough apart that works for you according to the time frames that you are looking for setups on. So we got our 15-minute chart. So on our 4-hour chart, our next step is to find the contraction phase that we are dealing with. So you want to find the last one. In this case, it was right here. You can see that tight range right there. And you can see that we popped out long out of there and it whipped back down. That's our expansion phase. Okay. You're going to want to draw your average price right out of that box or however you want to define it. We usually put boxes around ours. With our software, it automatically does it, but you could draw a box around it, and then you want to project out that average price right out the middle of the box. How you determine your directional bias now based on this is you want to find where the price is settling, okay? Price, you can see that we popped out long. You want to be careful when you first get out of the box, but as price settles, you'll see whether it's settling long or short according to average price. In this case, it settled short, okay? You can see we had some aggressive bars down there. So what this means, the 4-hour is the authority over the smaller time frames. Simple concept. If the 4-hour is entering the trend phase to the downside, that means that every time frame lower than a 4-hour chart is going to, all the big moves are going to be on the downside, okay? So what we're going to do on our 15-minute chart, this is where we're actually going to enter the market. Once we get into that trend phase on the 4-hour, we're going to look for the contraction phase because, again, remember, this happens on every time frame, the 3 market phases. We're going to find that contraction phase, and since we know that the superior time frame is trending down, it's confirmed by being under that average price, what we're going to do is we're able to short the expansion legs, these manipulative legs. We're actually going to be able to short those for the absolute most optimal entries into the prevailing trend. So here's an opportunity there. Here's a contraction here. There's 2 opportunities to get back in. Here's another contraction. There's another opportunity. Everything above the contraction phase in this situation when the 4-hour is short is an entry opportunity. Okay. Here's another one. We pop out low. We come back up, but the fundamental direction on that 4-hour has not changed. So every single one of these.
Okay, now this is where it got kind of wishy-washy for me. Number one, you have to wait for the H4 to expand, okay? Then wait for the market to settle at contraction to define market trend. So the market, so it's already expanded and now we're kind of like moving into the trend. Now, number 2, once the market is in a trend, you then have to move to a smaller time frame and wait for everything above the contraction phase to get an entry. But what does an entry even look like? And that's the question, right? it's not easily definitive. I mean, the pullback above contraction could go on a lot longer than expected. And when it does go above contraction, what defines a trigger point? Because just going above contraction is not enough. And that's when I noticed it. Let's go into the charts. Hey traders, this is the key to the whole thing. What I'm about to show you right now is the key to the whole thing, this master pattern playing out with the event chain. This is the key. And when you see it, it's going to be so like, but this simple way of assessing expansion zones, expansion plays or expansion legs makes this whole thing work. And it's so simple once you begin to define it for yourself. So let's dive in. So here we are at the contraction area. And now the market has expanded from this area. I usually draw the expansion to the bodies. I don't really involve the wicks, but on this instance, I'll involve the wick just for clarity. So we are in expansion phase. Let's send that to the back. So the market has now expanded out of this contraction zone, right? And we can see that is beginning to expand back into the zone. From this instance, I'll draw it to the body, just again for ease of clarity. It's expanded now back into this contraction line over here. But if we look to the left, what's sitting at this contraction line? A daily area of supply. Traders, this is the key to the whole thing that I discovered. You want the expansion phase to expand into an area of supply or demand. It gives you such a phenomenal edge as you map the market, having to understand exactly what is going on, why it's happening, and when it's happening, and it allows you to stay out of the market and only get in when the market is in that trending phase. The expanding into supply and demand zones is the key to this whole thing. Now, you have to understand that you can't draw a contraction line unless the market begins to expand. You can kind of get an idea of a contraction when this forms on the daily, then the next day this forms. You can begin to, get a picture and wrap a zone around it. But a contraction is only a contraction once the market has begun to expand out of that box. Okay? So the market's expanded out and it's expanded back into this box, right? As we can see, the wicks in there, and now we're in a daily area of supply. So what do? We go down to the H1. And if we look on the H1, we have an event break area, and we have two trigger points. We've got the origin of the zone that broke it, and we have the birth of this. We have the birth that actually led to the break. In this instance, these two are quite wide apart, so we'd have one entry. We'd split our risk. We'd put one entry here for a short, and we put another entry here for a short. This gives us a phenomenal edge as we map the market into these supply and demand zones. So in this instance, yet again, we've taken 100 pip zone and taken it down to 15 pips, 13 pips, which is amazing stuff. And we've got this massive run. And if we take a look at that, 280 pips from a daily perspective, would we really get that? Of course not. Where's the ideal place to maybe take some profits? Just below this low, so maybe around 168 pips. Not bad, not bad at all. Okay, so that's the first one. Let's go into the second one now. Contraction. We are again expanding out of there. Let's just take it all the way down. But look where we've expanded into. We've expanded into a daily area of demand. Okay, let's dive in. In this instance, there is no event break. It's a clean stroke into this daily area of demand. But as the market pulls back, what do? We pull back into a lovely area of H1 demand for our trigger long, and the market then proceeds to move up from this area. And if we take profits around this high, that's 236 pips, 232 pips. Again, not bad, okay? Not bad at all. Okay, so this one, again, this one's a little bit more tricky because we're not expanding into a definitive area of demand, okay? But we are expanding back into this contraction line. And this is where we look at structure. So again, the market has proceeded out of this box. Okay, the market is expanding when it expands out of our contraction box. So as we can see, the market has expanded out of there, center back. Let's make this the expansion phase. And it's expanded back down again. Okay, into our contraction line. And as you can see, now once it's expanded down here, you can see that the market on this day it's beginning to kind of like stabilize again. If it was going to expand down and then break down, then maybe we'd get a level test back to this area, and then maybe the market would push down. But it's beginning to stabilize. So what do? We just simply go down to the H1 time frame. And what do we begin to see? We have an H1 event break area, which is holding up price. Once this is broken, we then look for the birth of the move, and we have a perfect area here to take a trade from. What's that in terms of pips? 22 pips, not bad. And if you're going to take profits at the high, we've got 154 pip win. I hope that this is making sense, guys. I really do hope that this is making complete and utter sense from this perspective. We now understand exactly what is happening with every single candle. Okay, every single candle has some form of representation to it. There's no more guessing, no more wondering what the market's doing. We know exactly what it's doing at every point because we have just gone through 1, 2, 3 market cycles. Okay, and we're only in the trending phases of these cycles. Okay, trending phase right here. Again, trending phase right here. Okay, and again, trending phase right here. This, guys, it's crazy. It's absolutely crazy. So for the sake of time, I'm going to do one of these on the H2 chart, and let's see how that plays out. So thank you guys for sticking with me. I know this video is quite long as it is. I hope you're finding some real value in this, and I hope you'll be able to use it efficiently to enhance your trading. So for the sake of time, what I'm going to do is basically play out this one contraction phase, expansion and trending phase, and then from there what I'm going to do is I'm going to speed up the other market cycles so we can get through this video just a little bit quicker. So we have this contraction area here. Okay, so let's just draw that in, and we want to make sure that's at 50%, which is there, which is perfect. Now it's expanding, but where's it expanding into? We've got a nice little H2 zone over here. Boom. Let's draw that in. Now sometimes the market can expand out of an area, but not necessarily expand into an H2 zone. But what will happen is that sometimes it will form structure. Now what you've really got to watch for is that structure starting to hold. As you can see here, the market structure is holding, but do we take entry here? No, we want to take entry closer to around this contraction line. But once you start to see market structure holding, then you want to start looking for entries on the next bit of market structure that begins to hold. So here, also as well, you could go on another entry as this H2 area formed. You would have taken a move. As this moved straight back in, you would have been in. All right, so let's just take that away. Now once this expands to this area here, okay, let's go down to the 15-minute. Let's see what we've got. Perfect. We've got a 15-minute event break area, and we also have a 15-minute trigger. Okay, so let's just zoom back out to the H2, and if we look at this, we are in the trending phase up until this point here. Let's just draw that in there, and let's get the trending phase. Okay, perfect. Let's take that to the back. Perfect. Now, as you can see, what comes after the trending phase? The contraction phase. Let's speed things up a bit. Okay, so I hope you can see from this how we can map the market. Okay, every single candle on this chart has been accounted for. Every single candle has been accounted for. There is no way that we can make a ton of mistakes if we know where we are at every point in time within these market cycles. And as you can see, the whole key to this is the expanding into supply and demand zones. Now, where are there some nuances? As we can see here, where is this expanding into? There's nothing, there's no supply and demand zones here, right? But there is a low, and we just have to watch price action. We can see that the low market spiked through there, then came up and held above. But then what formed immediately after this low was contained, this candle was contained above this particular low? We've got a bullish engulfing structure. Draw that in, boom, as soon as the market comes back in there, you got your trending phase, and then we go back into the contraction phase. After every trending phase, guys, there is a contraction phase. Okay, then again, we've got expansion, and then it forms an H2. Market then pulls in, small trending phase, and then we're back into contraction. Contraction, we then expand into this H2 area of supply, and then we get a big trending phase again. We've got 1, 2, 3, 4, 5 market cycles, guys. 5 market cycles. And if you can define this for yourself, if I need to make another video that goes over it, I don't know, more in detail or more clarity, whatever it is, I really want you guys to understand this. Having a map of the market, it creates such pleasure in trading these things, okay? Trading these pairs, these currencies, because you are defining something that not many people understand. And it allows you to stay out of the market a large majority of the time, where you would most likely be giving profits back. So please watch this video over and over again, and watch it once more, and I'll be coming up with more videos about what I'm currently doing to show you how it's working in real time. And guys, whatever you do, just take some time to do this. I was away for 6 months every day trading this in the trenches, and I don't even think I've kind of like scratched the surface. But just give it time and you will get it. It's not going to happen in a week. It's not going to happen in a month. It may not happen even in 6 months. For some of you, it may be just, it may be very flexible and you just be able to adapt it very easily. But don't be discouraged if you can't get it straight away either. Just keep on practicing, keep on being patient, and don't ever stop.